Good afternoon, guys, and welcome to this week's first update here at ATFX. We're going to talk a little bit about stock markets and the Australian dollar versus the Japanese yen. Clearly, those comments by Donald Trump on Sunday were bearish, and we saw a significant decline in stock markets. But after that, we've seen a quick reverse and a quick bounce in prices, and it doesn't look like stock markets are really ready to trade lower. So what is potentially interesting and ready to trade lower? Well, I think that is the Australian dollar versus the Japanese yen. Firstly, we had the RBA rate meeting. I know it was not as dovish as a lot of people projected. They did not cut interest rates, but the things are set up right now. They might do so in the August meeting because they're looking for labor markets to improve. But Westpac, one of the biggest banks in the region, actually projects that both inflation and unemployment rate will deteriorate this year, and that is going to be very, very difficult for the RBA to hit its targets in 2019 and in 2020. So they project 2 rate cuts this year starting in August. But not only that, we know that the Japanese yen tends to gain on the back of bad news. And if we look at the chart for the Australian dollar versus the Japanese yen, you can clearly see that it's already trading in some sort of a bearish pattern. In fact, the price has been going lower since mid-2018, and the price stabilized into this range here from January 2019 up until April, when it did try to trade higher. At that point, it didn't really manage to trade upwards. I was bullish myself here on the back of stock markets moving upwards. Stock markets moved upwards, but the currency pair did not follow. And now we are actually below the rectangle pattern here, and that really opens up for further declines. In fact, today's candle is bearish, and really indicates that as long as you trade below 78.05, we could potentially trade lower. Now, again, what's interesting here is that, firstly, in regards to the trade deal, if they indeed go ahead and introduce tariffs on Friday, additional tariffs that would be, then the Australian economy and the Chinese economy are going to suffer on the back of that. That's one reason to be bearish. The other thing here as well, again, as I said earlier, is that the Japanese yen tends to do well when there's market turmoil. Plus, you have the domestic conditions in Australia, which warrants rate cuts this year. So you have those 3 important factors here. Plus, the 4th factor would be, of course, the actual chart pattern. And the chart pattern here, as you can see, is bearish. So I do think we could potentially trade lower. Obviously, what if Friday evening or, say, Saturday or Sunday, they say, look, we're not going to introduce tariffs. In fact, we agreed. We have this new super deal that's going to be very, very good for the world and America. If that comes out, then obviously this pair is going to be trading close to 78, maybe 79. So there's high risks involved here. But if we ignore that for a few minutes and sort of say that they're in fact going to introduce tariffs by the end of the week, then most likely this is going to be something that's going to be trading lower, and maybe we're going to be trading at 75.24, which is the target. And the difference between the the lower limit of the pattern and the higher limit of the pattern, the difference between these two make up the rectangle, and the break to the downside here suggests that we can decline, and this is a total of 228 pips. So this could be a better market to trade if you happen to be bearish on the world economy and bearish on the whole trade deal. Because if you do try to trade something like, say, the Russell 2000, which looks a bit different, let's see if I can load that for you, then you're still dealing with an inverse head and shoulders here. So even despite those bad news, when we were trading lower on Monday here, traded as low as 1575 in the Russell 2000, people were saying, all right, we're dealing with an uptrend. Maybe the trade deal is not that important, because remember, the US economy is doing very good. The non-farm payrolls were very good as well. So there's a lot of opportunities or reasons really to buy here. So here, if one tries to short something like this, you just be fighting the trend. You wouldn't do the same if you were trading the Australian dollar versus the Japanese yen, which again is already bearish. Okay, guys, I hope you enjoyed this market update. Don't forget to subscribe to our channel, and don't forget to like the video. The more you share, the more we care. Thank you so much, and I'll see you guys for the next update tomorrow. Thank you.